Hi everybody, I'm Wagner Nolasco today, and we have amazing news for you. Here we go. How will rising interest rates affect the real estate market in 2022-2023? Watch this video and I'll tell you how. Here we go. High interest rates are affecting the real estate market in 22-23. Very important topic, very diligent topic to be spoken about. And here we go. We are in July 2022 and you guys have seen how important and how high the interest rates have gone. Well, let me give you some data. It's not that high. We are actually about 6.7% on a fixed 30 years. I just closed on some loans that I had locked in for 6%. So that is exactly where we were in 2019, 2020 before COVID. This is not really high at all. Cash flow is still positive. So 2022, we expect the Fed to have maybe one or two more raises on interest rates. But what are we doing to actually control that? Number one, we're actually locking in our interest rates today. We have partners that work with us that actually will give you a mortgage on today's interest rates, and he will lock that rate for you up to 12 months, meanwhile your house is being built. So interest rates are very important. You should actually pay attention when you buy the house. And my advice is work with one of our preferred lenders and lock your interest rates on today's rate so you can preserve your assets, meaning you're gonna pay less for the cost of money when you lock it in with a fixed up to 12 months. Next topic, watch this video and I'll tell you exactly where the market is heading. Here we go, everybody. How does high interest rates affect the housing market? Really important. It is directly correlated to the amount of loans that are being issued. People don't want to go ahead and pay a high interest rates, but I have news for you. We're not at a high interest rate at all. We are at 2019, 2020 interest rates right now. Believe it or not, yes, that's exactly what we were paying prior to COVID. So some belt states, still you can lock in your interest rate right up to 12 months, but how does it affect? When interest rates goes up, the demand comes down, right? Everything in life is about supply and demand. That's how the world, the commerce is actually done. A lot of supply, usually if you don't have the same amount of demand, the prices go down. Very high demand, low inventory, low supply, prices go up. What's happening right now? With the high interest rates, with the interest rates actually going up, we have seen people being more afraid, being more fearful, or not be able to afford those payments. So only extremely intelligent people are purchasing right now because they see the real value of real estate in 2022, 2023, especially entry level, and they're taking advantage of those fixed 30-year mortgages. But you gotta realize not everybody can afford a house. So forecast how it's being affected, a housing market, it's directly affected because people are afraid. When there's fear, there's opportunities. So watch the next take on this video and I'll tell you exactly where the market is heading. And if you're an investor, how does interest rates affect the rental market? It directly affects the rental market. As I had told you before, when people have very low to non-existent interest rates and people have capital, which is fiat currency being printed by the Fed, they're actually printing money, so that actually is capitalizing to all the people that work in the US, and they actually have more buying power. When the interest rates go up, the banks get more selective. The money costs more, so people get afraid. So sometimes they don't have the down payment, sometimes they don't have the good credit, sometimes they don't have the ability to pay a highly monthly mortgage payment. And that leaves a lot of inventory available for us, investors. Yes, so when we buy more properties to put it for rent, and the market has a very high demand like the state of Florida does, actually rents continue to go up because we have more product, but it's actually more renters as well because people are not purchasing. Remember that. So let's just say that 1,000 homes got into the market per month in the greater Orlando area for rent. Now, because homeowner occupants are not buying, now we have 2,000 homes getting into the market, but we actually have now 50,000 people moving in a month to the greater Orlando area on a monthly basis. It's over 1,700 per day right now. So it's huge. So when people cannot afford a house, they're gonna rent. Today we have 40 to 50 tenant applications on one single family home available for rent. So that number is not coming down, actually it's increasing. So we have seen interest rates go up, rental availability come down because there's not a lot of homes available and the demand is going up. So it directly affects the rental prices because, more, I told you already about supply and demand, right? So very low demand, high supply, prices go down, right? If you have a very, very high demand and low inventory, prices tend to go up. So that's where we are right now. Low amount of inventory and rent is going up. So inflation is helping the rental market directly. The next question is very important. Is it better to buy a house when the interest rates are high or when the interest rates are low? That answer is depends. And I'll tell you, would I buy $1.5 million, $2 million home in the Orlando area today? No, I wouldn't. Would I buy a $200,000 to $250,000 property or $300,000 property for rent in the Orlando market today? Yes, I would. Why? Because the demand is extremely high for rents, right? And the purchasing power of the regular American citizen is coming down. People can't afford a house, so they have to rent. We're becoming a renter's nation. Millennials are renting, boomers are renting right now, baby boomers are renting right now, so actually that trend is increasing. So the answer is this, depending on the asset class. Entry level, absolutely. Buy it at any time. As long as you can get a 30-year fixed mortgage, buy a rental property. Don't buy super expensive property. So anything above $1 million, $1.5 million, $2 million, I really believe we're going to have a price adjustments because of the high interest rates or at least less demand of purchasers. So watch this market very closely. Entry level, yes. Very high-end properties, no. This is almost the end of our video, but I have 2 more topics to discuss. How will high interest rates affect the housing prices? I just answered that question on the take before this, but this is the question. If you have very high-end properties on the market, they used to stay seconds on the market because we had multiple offers. It's not happening anymore, not even in Florida. So very, very high-end properties are slowing down. So once again, I explained to you before the supply and demand, but I'm just gonna tell you, if you had 15 offers on one house going into the market that was $2 million and people are paying above asking pricing, 2.5, 2.4, 2.6 for the same house that was listed for $2 million, that's not happening anymore. July 2022, it's not forecasted that interest rates are gonna come down, not yet. They will probably by the end of the year next year, but we're gonna talk about that in a different video. And high-end properties are becoming longer on the market. So bargain. It's a buyer's market for high-end properties, but on entry-level properties right now, we don't see anything being affected. We see a very high demand of investors, extremely intelligent investors, picking up their inventory and actually putting to work for them, putting for rent. So high demand of rentals, very low demand of very high-end properties. So just watch closely so you don't make the wrong decision when you're moving into 2022, 2023. Just understand the asset class you invest in. Entry level, yes. High-end, no. Here we go. Will house prices fall by the end of 2022? Same question, worded differently. And all those questions we get from our listeners. So if you have a question, send it to us. We'll make a special video for you if the topic is in very high demand. I don't expect single-family townhome projects on an entry level for prices to drop. I expect prices to continue to increase because the cost of construction is continuing to increase. So we're still going to have a very high demand of entry-level properties and no adjustment on prices by the end of 2022. High-end properties, absolutely. I think we're going to have an adjustment on prices just because of the supply and demand idea that I explained before. We will have some adjustment on prices on high-end properties by the end of 2022. So stay tuned. When is the best time to buy a house? Yesterday. 1 month ago, 1 year ago. If you haven't done, today is the best day. Just like planting a tree, right? If you don't do it today, you're gonna regret it in the future, especially entry-level homes. Build your portfolio, take action, study the market. Sunbelt state markets, Florida. We have available properties on www.b2rdirect.com at any time. Click on our properties inventory, find out what we have available. Let us know. We do property management. We're fully integrated. We do property management. We do sales. We do build. We do construction and development. We do insurance. So we will actually be a one-stop shop for you and your investment needs. Thank you very much. I'm Wagner Nolasco from Build to Rent Direct. Go there, take action, and have an amazing day.